Hello and Happy New Year, everybody. This is Sean Wohland with today's Monday morning mortgage update. And I've got some exciting news I'm going to be jumping into pretty quickly here. We are going to be going live again. So I went to a video version of the updates last year. Last year was a difficult year, had some health issues, some family health issues, my father passing, and there's a lot of stuff going on. So it was easier for me to send out links to the recorded versions. But we are going live every Monday. We're doing that at 10 a.m. every Monday moving forward, a live mortgage update. We'll be going over current products, some tips in the marketplace, what's happening with rates, and going over all kinds of good stuff every Monday live, 10 a.m. on Zoom. So check your email for the invitation on that. Super excited for that. So expect some fun things this year. So first off, next Monday's meeting is going to be very, very good. We're going to be going over a deep, detailed analysis of what the forecast is for mortgage rates in 2026. So do not miss next month's Monday morning mortgage update. It's going to be phenomenal, and you will absolutely use the information I'm giving you with your customers. I promise you that. So it's going to be fantastic. So I'm going to jump right into the Monday morning update. But first, did you know is a new segment we're going to have on our updates. And here's the first one. Did you know that a borrower of any age that has good liquid or big liquid assets, but no job and no income can still do a normal conventional loan? That is exactly right. They don't have to be retirement age. They just have to have a lot of assets in the bank and stock market. It can't be tied to an IRA, which has some retirement restrictions. But the way we do that is this. We set up a recurring distribution of income to be enough to qualify for the mortgage. That income needs to last at least 3 years in order for us to use that income to qualify. So in other words, that asset has to be big enough to last 3 years of income distributions at that income limit. And then once we close on the transaction, that income distribution can be canceled. So literally, this is how it works. Okay, borrower, looks like you need $7,000 a month of income to qualify. You've got enough assets so we can set up a distribution so that you can qualify. We're going to do one distribution now to show that it's been set up and that you have enough assets for that distribution to last for 3 years. And then once we close on the transaction, the purchase has recorded, then we cancel that distribution and you no longer have to take any distributions moving forward. It's as simple as that. So it's a very cool hack into helping people that don't have a job, they don't have an income source, but they do have assets. It's to help them qualify without having to do a no income documentation loan or a bank statement program of some sort, or a no ratio loan, which is basically the employment is left blank. Those all have higher interest rates. This is a way to getting the lowest possible rate, and it's a fantastic tool. So keep that in mind. If you hear of anyone that doesn't have a job but they have good assets, this is the loan program for them. So a loan spotlight is another new segment, and here it is, loan spotlight. Now this is called the My Community Mortgage. It's a conventional mortgage, and it's region and area specific. So this program is you have to find your listing on the map in order to see if it qualifies. So it is regional and very area specific. I have a tool to be able to see if the properties that your buyers are looking for or if your listing falls into this area. But the discounts on the rates are phenomenal. So let's just say you have somebody looking for a conventional mortgage. They've got a 680 credit score and they want to do a traditional conventional mortgage. Well, with a 680 credit score, that loan level adjustments because of that credit score is pretty significant. So on a conventional loan, you're looking at about 6.875 on a rate, but on a My Community program, that rate is only 6.125 with the 680 credit score. That's a 3/4 discount in rate if you fall within the region that this is eligible for. So it's a really, really great program. And if you have any listings that you're wondering if you want to talk to me and just kind of set up a plan on how to market this for yourself, give me a call. We can go over that in detail. And if you have any buyers that the properties that they're looking for is in this area, in these areas, they're going to be very happy as well. So that's our current loan product spotlight. And now we're going to go into what's happening with mortgage rates right now. So if you look at the current mortgage rate update, this is the 30-year mortgage-backed securities. This is the roller coaster, so to speak, that they had over the last 2 years. So if you look back, actually this is the beginning of 2025, so the last year. At the very beginning of 2025, mortgage-backed securities were at a low point. Rates were pretty high. But we saw a nice uptick in the mortgage-backed securities. And if you see this section right here, we were looking at really a peak in the mortgage-backed securities. Rates hit the 6%, almost in the 5.99 range with no points. And then they worsened, and then they got better again, and they hit this almost again, and then they worsened, and they tried to get better again, and then they worsened, they tried to get better again. Now we're right here. Notice that the rate at 6.125 or right around that 5.99 range, it only hit here for about a day. And it only hit here about a day. And then again, it tried to get there, and then it retreated, and then it tried to get there, and then it retreated again. And then we ended up almost back there again. So notice that rates, when they do dip, they don't last. So we want to make sure we're careful that we're timing the markets. But look at that, guys. The markets do not want to get into a range that would yield a 5% rate yet. So it's going to be very difficult for us to get into that range. So we'll have to really keep an eye on that and try to really help our buyers understand that when they do dip, it's not for a long period of time. So trying to time the market to buy a home when rates are low is going to be very, very difficult. So it's going to be good. Hopefully going into the new year, keep in mind that in the next couple of weeks, we have a really cool, next Monday, we have a really cool update on what is going to be happening moving into 2026 as far as the forecast for mortgage rates. But let's look to see what's happening this week. So today we had ISM Manufacturing. That is the Institute of Supply Management, kind of what's happening with manufacturing. Numbers were a little weak, but we got a little improvement on that today. 3-year Treasury note auction tomorrow. Wednesday's a big day. We have ADP private payrolls. We have JOLTS number coming out. We've got the IS factory orders. We've got ISM non-manufacturing coming out, and a 10-year Treasury auction coming on Wednesday. And then Thursday, we have Challenger job cuts. We have continuing jobless claims. We have trade balance, which is going to be really interesting because of the tariffs. We have non-farm payroll activity, productivity. We have union labor costs going in on Thursday. 30-year Treasury bond auction, consumer credit change to see what's happening with consumer credit. And then on Friday, the big unemployment rate is going to be posted. That's going to be very interesting to see. Building permits, see what builders are doing, how the markets are working for them. Housing starts kind of correlates with that. Then we're going to go into average weekly hours and earnings. So if earnings are lower and the hours worked are lower, that could be a good sign for a weakening economy, which, could help mortgage rates. And then non-farm payrolls, and then consumer sentiment. So that's all happening next week. It's going to be, or this week, it's going to be an action-packed week. But keep in mind, next Monday, this report that I'm going to be doing, this Monday morning mortgage update, is going to be an in-depth look at what's happening this year. So keep in mind, we are in an environment where rates are always changing. So if they do hit 5.75, it may be for just one day. So trying to time the markets for getting the best rates when buying a home is really a fool's errand. You can always refinance once they dip because that you can time. But if you find a home of your dreams, just buy the home because remember, marry the home, date the rate. But we should get lower rates into the year, but they're not going to be as low as a lot of people predict. A lot of people that are buyers, a lot of buyers think, you know what, I'm going to wait until rates dip into the 4s. That may never happen again. Will we get rates in the 5s? We hope, but most of the major predictors, people that are predicting rates like Mortgage Bankers Association, the Realtor Association, NAR, Wells Fargo, a lot of these people that are predicting what rates will do, Fannie Mae, Freddie Mac, they all believe rates could dip to 5.75 with no points, and that's the lowest they're predicting. So they're not going to see we're not going to see massive drops next week, but we'll get into that a little bit next year or this year. We're going to get into that a little bit more deeper this coming Monday. So can't wait for the live updates to start again. You guys have a phenomenal week, and please give me a call if you have any referrals. We do work by referral only, and we really do appreciate all of the referrals that you give. So we look forward to seeing you soon. Have a great day. We'll talk to you guys later.